here's the thing. I'm inside the MetaTrader, and I'm gonna show you just the simple part of getting into the meta editor is if you know where the F keys are on your keyboard, the function keys. If you hit F4, you're gonna see meta editor come up, and this is a drop script that after you get done writing the script, you would just see it on your in your navigation screen, and you could click on it and click and hold and then drag and drop it onto the chart where you want the order to go. And to set up the stops and the take profits, this one is written to sell where you place it with the 8 pip stop to make 12 pips. But in the real world, it's probably going to be, say, when you put this in the market, maybe risking 11 pips to make 10 pips. So even if you write a break-even script, if you don't put the spread in there, forget about it. So a lot of these trades, this is like a break-even order. But so you may want to write a script that says risk 10 pips to make 20 pips, and you're still not getting double your money. And this is why I think you really need to place a lot of orders. Now, I'll post these. There's a buy and sell script here, and I took out a lot of the. I was getting errors on these things when I compiled it because. So after you open up, you hit F4 on your when you're a MetaTrader, and you open it up, and you're going to select new. And you're going to go to script, and then you're going to next. And you can call it whatever you want. Now, I try to name it like 812, which means I'm risk 8 to make 12. And you just need a whole palette of these things basically to approach the trading day. Now, coming into tomorrow night session, I'll be placing all these single drops. And I'll probably make them last for 6 hours or 8 hours because I don't want to have to come back to this thing. And if I think it's a good place to get in the market at that price, then I place the order there. And I think 5, 10, 15, 20 pip stops, if you write 4 scripts, say, and 4 sells, 4 buys. And really what's going to come down to is more of, you're going to risk 10 pips. How many times are you going to risk 10 pips? And if you've ever been stopped out of a trade where you know where the market's going, it's frustrating because you know the market's going there, and you're like, come on, really? I mean, enough already. You know where the market's going. Can we just get there? And that's if you're looking at a 15-minute chart, or you're just impatient, and that can happen. Maybe you want to go to the 1-minute chart. Of course, there's more order placement, and then you're really at the mercy of, I mean, if you get down a 1-minute chart, hopefully you got psycho tight, really tight spreads and everything's, but there's certainly that window, and then you go to a 20 pip stop, that's kind of doable. But I think in that situation, when the market comes down 8 pips and you're buying every 2 pips it drops with a 20 pip stop, and you're going to accumulate a position like that, then that's great too, because that's you're really getting in. I mean, if you did the math on that, it's just such a, like you're drilling down and down and down into this fractal where you're literally getting in at a harmonic, a true harmonic, not a Gartley, but you're getting in a horizontal harmonic that's logarithmic. So it's a compression entry. It's not a linear entry. That would be martingale, and that may blow up the account. Well, it certainly wouldn't blow up the account if you didn't risk too much, but that's a dollar risk, not a risk reward ratio risk. And of course, the sizing here is critical. Now, if you change the size by any of these numbers you change, it's going to dramatically affect the way in which you approach the market with this style, these orders, because everything you do matters. People think it doesn't matter. That doesn't matter. Like in the big picture, because really you're going to lose on some of these trades. It's certainly the ones where I guess there's greed in asking to risk 5 pips to make 20 pips. That could be considered a greedy trade, and risking 10 to make 100 could be a greedy trade. And of course, risking 10 to make 100 is the dream trade if you're in, say, 20 yards of currency or whatever they call it when you're up past, then you're like some big banker guy. So you actually could make, I love that they call this the wizard. Whenever I see wizard, I get concerned. So I'm not a big fan of, sorry to switch topics so abruptly, but I get back to this thing here. I get carried away. So in the script thing, you can call this, I just call it sell, and I put 8, whatever. You could call it anything you want, but you kind of want to have the timestamp in there, which these scripts have in there. And then you just keep going next, and so you're going to call it, say, sell. For lack of a better, but I could just call it sell. And then, of course, if you're just going to always trade with 8 pip stop, then you don't care. And then you hit finish. Oops. I guess I've already created something like that. So here we are, and here it is. And this is the out-of-the-box starting code, but you don't really need this. So what I posted in this Google Plus script thing is all the scripts in there, you should be able to paste them in. So it looks like this. You hold down the control key, and you hit A, which highlights everything. Now you're going to hit the delete key, and upon the delete key, now you're going to file save as. And here's where you're going to name it, or you can wait till later. So if I compile this right now, it'll save it. Because as long as there's an asterisk up here, that's going to be in, it's not compiled yet. But there's one error, and I guess it compiled, right? There's no data in there. So it's saying, are you kidding me? So what I'm going to do is I'm going to go to this, then everything I posted in that MT4 script trading, I want people to be able to trade within their psychological threshold for pain. For some people, 50 pip stops do not matter. Of course, if you're in 1K, that's like $5. So $5 may not be a big deal, but if you place every $5 order all over, like, it adds up. In 10 orders, you're risking $50. So if you put 100 orders in, you're risking 500. 501Ks. Now, this is the thing, is that you can make a pile of money if you basically saying, I'll risk $2 all the way to, in other words, if you're always risking, say, 2 to, I guess your worst trade would be $3 risk, right? And I'm going to risk $3. That's 30 pip stop on a 1K. Now, if I change this to 1K, 0.01, and compile that and save that. Now, this one I just put a 10K in, and I guess, if you're trading a demo, you kind of want to see if you're making money or not. Well, I mean, most demos, you have a big fat bank account of like 50 grand or 100 grand in there, so you want to see percentage-wise. So a demo, you run a little harder than the real world. You can always back this down to the real world and be like, okay, I'm risking $1 here. After the spread, you're risking $1. Now you're going to risk $2 on a trade. Then this is going to be sitting at maybe 16 or 8, 16 pip stop. That's about $2. But there's everything in between. In between a 16 and in between a 20 and a 10 pip stop, there's plenty of room for diversification. There's also there's a lot of room for better than break even. This is almost break even. If I made this into a 22 with a 13 pip stop, which may sound very strange, you got 13 pip stop to make 22 pips, and you've chosen that ratio up front, and you're stuck to it, and that's the old saw, which is, these cliches do work. It's just that most people don't follow them, and plan your trade, trade your plan. That's basically what this script group's about. And so I had a couple of people, had some guy in Germany ask me, well, everybody asked me, well, so where do I place the order? Well, I guess it does matter structure-wise, but the critical thing is to accept all losses up front. And this is what script writing enables you to do, because instead of looking for a Gartley pattern or a butterfly, and I do like butterflies better because there's something more romantic about a butterfly than a crab pattern. But so if you're accepting all your losses up front, you're really pretty much the lowest stress trading you can get. I just saw a guy doing video on low stress Elliott wave trading. I thought, well, Elliott wave trading, you're always playing in your head. What time frame am I in? Like what? In other words, what wave count am I in? This would be like if you showed up and to play in a jazz band, and you show up with your guitar, everybody starts playing. If you don't have anything to play, you usually don't play. If you have something to pipe in with, you're looking for a slot to get in a word in edgewise or something. And so in trading, you're looking for a slot too. You've got your, like if you come in with a guitar, say, you've only, unless it's a 7-string or 8-string guitar, which there are 8-string guitars out there, for people that want to delve into a little bit of another instrument. But when you're doing the same thing with the market, they call these things instruments. Each currency pair is an instrument. So I'm basing really everything on here. I'm talking about the euro dollar, because if you're going to trade super tight and super often, high frequency, and you're really going to be developing systems that maximize the market, and I guess you could call these things algorithms. These, of course, the words become popular and sexy, or whatever you want to call an algorithm. Words that are big and fancy have a mystique about them, and of course people misunderstand the meanings of words, and it's just it's hard enough to get through a day. But the nice thing about script trading is that you've chosen, that's your ratio, or that's your pips amount. And pips are psychological because people will say, oh, I made 500 pips. I'm like, well, yeah. With a 100 pip stop, that is a damn good trade, and with a 50 pip stop, it's even better. But realistically, how long does that move last, and how long are you in that trade? And of course, for all this script writing here I've done, I'm trying to put the timestamps on here so that for the next 8 hours, I'm really willing to risk 25 pips to say make 45 pips. It's not quite double your money. It's not, but these are trades that when the news comes out, that's how you want to think in terms of, and placing those orders in there. Now, you may get bounced out of some of these guys because, for the love of Pete, this is risking 8 pips to make 12, and it's not even 5 to make 10. That's not even. It's not. It is double. I guess it's double your double your money, I guess, right? But not really, because you've got to take off for the spread and everything. So maybe it's 40%. Not bad. Better than the 10% that people say, oh, if you make it 10%, you're doing good. Shut up. Absolutely not, because you're going to make some, you're going to do some psychological mistakes, or just some trading mistakes, or your internet connection blows up, or, stuff can go wrong. So in a true fail-safe world, but the single drops don't crash. And that's one thing about single drops. If the platform won't accept it, it's not going to even drop. So single drop is the safest and the most work. Usually life's like that, right? If you double check everything, you're good to go, especially if you're going to fly one of these small airplanes, which I understand, it's definitely tough sledding if it doesn't work out. If you got one engine in that thing, it's always a problem, right? So this is kind of like preparing for flight. Of course, if you're a pilot, you want to be a trader. I think that whatever you've been doing before you were trading, or if you want to quit your day job, all the skills you have in your day job are totally transferable into trading. But I think approaching this from a bookkeeping standpoint of, looking at the market as what it really is. If it's a market, then it's got to have inventory. And there's definitely price levels where it's ripe to get in out. But this, so you would just take and everything I posted in that site, you just take the whole thing and you paste it in. Now, so it'd be like this. Say you hit Control, hold down the Control key, hit A, then and then come back, hold the Control key, and hit I think it's C, copy, and then come over here and hold down the Control key again, and hit hold down Control and hit V. Okay, now it's in there. Now compile it. Now you can name it. Once you create the master sell and buy order, I'm going to post the buy and the sell here. Then it's a matter of, okay, well, what do you really want to risk? Hey guy, how much skin do you have in the game? So and you decide this all up front. So it's your playbook, whatever you want to call it. Like say you're a football guy, you got the playbook. There's only so many plays. If you're a chess player, you cannot. There's illegal moves, right? So the illegal move here would be placing a buy stop that is so tight that it's ridiculous, right? If the spread's 3 pips, you can't put a 3 pip stop in. Your broker won't let you. So accepting your broker's spread, and when the news breaks, the spread just before the news breaks, these spreads will increase to ungodly amounts of, say, I've seen 20 pips on a retail broker. I mean, truly outside of ENC world of people that are trading. There's all sorts. There's a whole, layers of how close you are to the market. Now, this. So if say your stop is 5 pips is your tightest stop, and you got a 1 pip spread broker, that's a 4 pip stop in essence. I guess that's about as thin as you can slice it. Now I put up a grid here of 5 pip grid with a 10 and a 20. So to try to visually identify the grid, what I did was I made the 5 pip grid dotted, and the 10 pip is the skinny and the 20 pips the fatty. Now, I also took the fib tool that normally comes with the system, and I rewrote the script. I rewrote the settings. So here it looks like this now. Inside of fib, what you do is you just delete everything that levels they've given you. So I created a ratio of double your money here, but in essence, or in reality, it's not going to be like that when you go to the market. But just to kind of have a rule of thumb, that this would be your caliper that you bring to the market. So if you're trying to gauge the market, I'm using it as a caliper. I took away, even though it's called Fibo, which is cute because everybody knows Fibonacci would be too long to spell. A lot of font needed for that. But if you just edit this, I made 0, 1, and then I made 3. 0, 1, 3 because, or you could put 4 in here. And that's probably even better to do because after the spread and stuff, at least you'd be making about 70 to 80%. Or I guess this is double your money here, so it's 100%. It's 80% right now, I suppose. I don't know much about percentages. I know if you doubled your money, you're doing pretty good, whatever that is. I don't know if that's 100% or 2%. Yeah, but I mean, making 10%, that's ridiculous. Who wants to do that? 10% a year or something? Oh my God, jeez. Better to buy some antique and hold on to it. But if you're trading this thing on a daily basis, which I think I'm in the half-hour chart. Yeah, I had the 15-minute chart up, but, half-hour chart, same thing. But you can get a real great gauge here when you edit this fib tool to how you want to write your scripts and what you think is acceptable pip loss as opposed to money loss. Of course, $3. Your worst trade's a $3 loss to make, say, $5 or $6 or $8. You're thinking in terms of that, you're going to survive and you're going to make, you're going to be able to really get the account, grow the account quickly. So I made the buy one thing, after you create this, you're going to want to, if you're not going to want to, but I just did it so you could see it. I made this color based on what I think this is a buy or sell, but Navajo White's going to be buy, and I made this turquoise for the sell orders. So you can trade both sides of the market, presupposing your broker lets you, and you don't have all these garbage rules. But so you're going to really drill down for, I should probably go back to the 15 on this. Let's scooch these over because I think I'm going to drop out of the picture. If I go to the 15, they're going to be off the beaten path. But this is a great way to plan all next weeks of day trading. Every day, actually, you have the same playbook. Say your worst risk is 25 pips to make 50 when the news comes out. That might be a viable trade. But I think it's better to have a 12 pip stop to make 24 pips and forget about the break evens on the bigger swings, because you can just place 2 orders to make up for that other. It's really about how many orders you place. Now, if you're running 0.01 or not 0.0, whatever this not is, I can't still get my brain around people that say not instead of 0, but I guess I'm language biased. I'm stuck in one language. But the the time frame here, I'll go to 15 just to give you that day trade feel. In 15 minutes, you're going to wait 1 hour for a setup. Now, if this was your buy script and it was going to risk 5 pips to make, say, well, this is actually risking about, if my stop's here, if I'm going to buy at the 20-yard line with a 5 pip stop to make 10 pips. Now, this is the thing that's kind of interesting here, is if you fix the scale, which you always have to do on a new chart, you can really drill down on your entries here. I can't say this is a strategy. It's more of a trade plan. These are just really boring trade plans. And the other thing with the script is you can determine how long this script lasts. So that's critical. Like down in the code here, if you go down where it says period, you're available, you could put in here H 1, 2, 3, 4, 6, 8, 12. Those are the new available numbers you can put in here. If you try to put in, when you put in 3, it'll compile. It just doesn't, there's no errors, but you don't see that color shift that you see when you run this in a, if you run this, if you put a capital H in, you'll see a pop-up window. And it's giving you the available time frames, but it's not true because MT5 code is working partially inside of MT4 now as far as the scripts go. And I don't know anything about programming a computer, and you don't have to. That's the beauty of scripts, that you literally have the, it says take profit here. Whoever wrote the original of this, I had no clue. But you can also put, so you can put H 2, 3 that you don't see here, 6, 8, 12, and you can have D1, which is a day. So if you put a capital D in here, you're only allowed D1. There's no D2. But this is for people that have a day job, I suppose, or you don't want to sit there. Or 24 hours, right? It's 24 hours. And you can put weekly and monthly, but what would be the point, right? I mean, certainly you don't want to think past. And you can also be in here at, in the M's. Now, the brokers typically won't take this anything like M5. They won't take it. And, of course, there's the monthly at the bottom. This is not, and there's 1 minute. They won't take a 1 minute order because it's too much. You're asking too much. Basically, it's like, why bother? But a 30-minute and a 15 minutes totally doable, especially if you are a high-frequency trader, which means you trade a lot. Doesn't mean that you're high-frequency traders it doesn't necessarily mean that you have some lightning bolt server connection. So I'm going to make this of course, there's no name for this ticket yet, but when you go to build, I think I was on H4. I'll just compile it. Market's not open right now. Wouldn't matter, but okay. So this is the time, how long it lasts, how big you are in your stop. I'm sorry, this slippage I always leave at 3. I don't know what the hell it means. Stop and take profit. I guess you could play around with the slippage thing, but I don't even know. I don't know. I guess I'm giving it 3 pips of buffer. I guess you're more sure to fill or something. I don't get it, but a 3 doesn't seem like too. I guess that's the fees, right? I don't know how this stuff's rigged. These markets are rigged. So some guys say that. I'm like, just, life's rigged, for God's sakes. You're gonna die, But here is also another thing to consider is how you're going to comment about this. This is what shows up in the platform when you drop these scripts. And if you drop this, one nice thing about these drops is if you drop it above the market, it's a buy. This is a sell world. If you put this order below prices, it's going to be a sell stop. And if you drop it above prices, it's going to be sell limit. It just knows. So you can keep dropping the same script, and it doesn't matter so much. It's really about price, because it's going to get you in on a trigger entry as a sell stop, or it's got to come up first. But you're really, I suppose it's about like if you're in the middle of a triangle, you can be placing buys and sells, and you can stack up a bunch of stuff in there as long as you have orders that are going to make like triple your money, quadruple your money. Because when you resolve this triangle and you break out, you're gonna get stopped out of the 5 pip stops, but the other orders have already made money in the other direction. And if it resolves without triggering your other entries, then you're not even exposed to anything on that side of it. So it's really like setting up Jenga. You're anticipating the resolve that's going to blow up in your face, but you're building all these pendings in anticipation of that, blah, blah, blah. And, here is, you can call this anything you want. I just put it here so if it comes up in the comment line during trading, I'll see that, oh, there it is. So here in the comments, you have to turn them on. It's not turned on when you get the platform. Comments are turned off. Commissions are turned on. I turn off the commissions because typically there aren't any. If there are, then who cares? So turn the comments on here, and there you see it. Now, whatever you write in that window in the code is going to jump in there, which is nice. You can keep track. I guess if you want to get all carried away, you could dump that out to a spreadsheet, and you could overanalyze all your profit window risk reward ratios, and there you go. But all I've done here is created this buy and sell tool so I can calibrate, create, say, 3 scripts. So if I'm risk 10 pips to make 20, it's going to look like this. And I'm going to, my entries here, so as the market's dropping, in other words, just because the market's trading up here in this area, right now it's, I got to bounce between this drawing tool. So during this whole session here, it's trading sideways. Well, you could just be placing all these orders on both sides of the market. And you got stopped out of some of these, but you made 20 pips. Or you made 30 pips. You had some 30 pip guys in here. So it entails, if this is your buys and these are your sells, if your plan is to write scripts at risk 5 to make 10, it looks like that pretty much. But this may be like you're risking 4 pips, honestly, with this tool. Putting the spread in there and slippage or whatever. Now, if you blindly place orders at the 5 pip handles and you just martingale entry that thing, grid trade it, it's not as good as if you you could do that initially, But when we finally get up here, and say you've had some 5 pips, 3 pip stops to make 5 pips up here at the top here, right around that. You're just putting clusters in there. This is if you're trying to sell this thing up here. And after this happens, this is a 15-minute chart, so this is about a half hour of nonsense up here. Like, oh boy, that could be the, like this could be the shoulder, head, shoulder on a 15. So if you want to enter on a retest of this shoulder, when you put a drop in here, if your entry's here and your stop's there, you got stopped out. But if you're going to go with a wider stop of, say, 8 pips, then it looks like this, which I wrote the 8 to make whatever, but it's going to be 8 to make about 20, 8 to make about 18 or something in real world. And so if you had them up there, you got filled here, you didn't get filled here, but you're really looking at that shoulder as your entry for the limit. They didn't stop you out there, but you could have had an order with a tighter one here, and they didn't stop you out. You could have an order here, and they didn't stop you out. But you can see each one of these would have, if you're going to stick with a strict ratio of double your money, that's how it looks. And same thing, just because you're short doesn't mean you can't buy it. And of course, depending what your broker's going to let you do. So you got in there, you can still buy this. You can still buy this bounce here. Always thinking in terms of risking 5 to make 10 out of the gate. So even here, yeah, you got stopped out, but here you didn't. You know, here you didn't. Here you didn't. You made money there on these. As the market quiets down, maybe you're running these scripts as drops. Here's your sell limits. Here's your sell, the double top that becomes a triple top. They stopped you out of that one. But that's why you got to have a diversification of scripts. You've got sell limits here. You got sell limits here, but they're all orientated for the sell side to double the money or triple the money. Now, certainly the dream trade is this. You know, you're going to put this at 4. Make this 7. Make this 4. And now you're going to see how dramatic if your bias is to sell, but you're willing to counter trend trade for these kind of trades, and you're running this. So you've got this, I'm going to risk, I want to quadruple my money. Well, what do those trades typically look like? The perfect entry would have been selling right there. What if you can't? What if you only see this shoulder as your entry and here's your stop? And if you rode through this whole move, it would have been sell here, your stops here. You did not get stopped out. You waited through this whole thing till you got that take profit there. You could also just get the hell out. It didn't make your profit, but see, just in this instance here, how critical it is that when you start to imagine quadrupling your money, it's a fine line between their entry, your stop, your take profit. That was beautiful. And this is just 4x money, 4 times, you know, pun intended, 4x your money. But this same thing here, this top becomes the bottom pivot here. So from the long side, you're always got the scalp in here. Now, when they pulled it back into this top, they actually poked it down lower. So it's a real, you know, this is presupposing you're going to put this many orders in it. Your screen's gonna look like this. It's gonna look like a total mess, especially if you have trade levels turned on. But it's gonna look like something like this. This is if you wrote all these different ratio scripts, or ratios the same, but the pips. When you write the script, you're going to change the amounts. So the ratio stays the same. You're looking to risk this to make this. On these pullbacks, placing buy limits here, you got filled. You did get stopped out on that one. That's why you need to have, in order to buy on, well, this top here, or it's going to be like this. So it's a really, and of course this would be the ideal kind of exit because it's last known bottom. But if you're really going to trade this thing, you wouldn't rely on one order ticket. You just can't. Better to get stopped out on this one here. Okay, stopped you out, but you've got that same script that you dropped here. So it looks like that. There's just the market is determining how big your position is. I think a lot of people let the market determine based on a pattern that they see, like, oh, here we go. I'm going to trade the sell stop here. Where's my stop go? They're like, well, what's the last known high? They put their stop up here. Yeah, they didn't get stopped out, but to keep their ratios in line for the sell side of that, it looks like this. I mean, does this seem like a decent trade? Well, I don't know. Let's see. Did you make your profit on that? If this is your entry, where's your profit? Holy crap, you never made it, right? It's way down here, so it's ridiculous, and it matters, you know. But yeah, so that's the script trading in a nutshell, if you call that a nutshell. And the sell side of this looks like this. I mean, the buy side of it looks like this. Here's a 20 pip stop to make 30. It's a bottomless pit. This could be 0.03. You could trade three Ks on everything, and certainly when you get the account built up, yeah, maybe it's not worth the effort. But I don't think it's ever not worth the effort to do the extra. You know, the devil's in the details here. If you place one more order to be a scalper, also, these are the scalp trades. You're buying this retest here. Might have stopped you out there pretty close, but you definitely made that. And then as you expand this, this is just under quadrupling your money, right? You're risking 10 to make. Oh, I think I rewrote this one. So this one I didn't rewrite here. It looks like this. I'll set this one to quadruple your money. And just think in terms of these setups. Now you can go from currency pair to currency pair as long as you keep in mind the spread. If the spread's 4 pips, then certainly 5 pip stops are out of the question. But you'll know how to gauge all these things, and there's plenty of trades if you. I mean, if you're going to trade multiple currency pairs, I don't think you can approach it from an analysis point of view. You have to approach it from what's the market telling you, the volatility, where's your, what kind of script you can run, what kind of trade plan can you run, and I guess pips are psychological, whether you like it or not, and so if you have this fib tool set up, and I gotta change the time frame here to refresh the chart. Well, here's half-hour world, right? So here's a little bit of a step back from the volatility of it all. Now, if you're going to, in a perfect world with no spread, here's your 10 pip stop to make, you're trying to make, what was that, 10, 20, 25 pips, kind of. It's kind of frisky as soon as you move it there. Okay, now you're going to make 30 pips. Risk 10 to make 30, triple your money. So I guess the number I had in there before, of course, you may not get stopped out of these trades. So I don't know, maybe the 3 was not right. Maybe you have to put this stop at negative. That's probably what you have to put the stop at -1 or something. I don't know. But I'm just using the fib tool as my my trading plan. Now, keeping this ratio like this, you have this order in here to enter at the retest of this, and you did not get stopped out, and you made pretty damn good money. What, triple your money? So as you expand the stop, say you have the same ratio running, you risk this to make this much, you risk this to make this, on and on and on. And that was quite a tremendous explosion there. But during that whole time of this nonsense, this was tradable also from a standpoint of, say you had a tight stop like this, and you're getting in right at the edge there, you made money on this before that even happened. If you can imagine running a 5-pip stop to make 15 pips, it really would look like that. Now, even on the when you drop these orders, say you drop it right here, you get picked up in that trade, they stop you out, but you've also got a buy limit sitting here at the last known retest. Or even when the market's, as the market's dropping here, this is 15-minute chart, every time it drops, you put a buy stop on the top of the last known high. So it really is about continually every 15 minutes placing an order. Even here, as the market's dropping, buy stop, no fill, no fill, no fill. Then you finally get filled here, you don't make your target. And that is a problem. That's why if your stop is so tight that it's like 3 pips, you still didn't, this is about 3 pips. Your buy stop here didn't make your target. Only in a case where your ENC is letting you trade so tight that you have a 3-pip stop, and market comes down here, you get filled and they stop you out. So buy stop entry, trigger entry has problems. Here it's okay. Super fast plunging market seems to work better. It's almost a market order. As it's plunging down here, imagine you keep, and this is, say, a 15-minute order, so it keeps disappearing every 15 minutes. You finally get filled here, it picks you up in the stream, and it never looks back. Now that's certainly the perfect kind of trade. It never stops you out, and you don't run a trailing stop, and you take your money that you decided up front. If you write a script that's about a 2-pip deeper stop, that's this one. But if you're a scalper, it seems to me that even here, a retest of this low that you know exists, here you have a buy limit, and here's your take profit. You didn't make your profit. That's why you'd need to have another order that you wrote that's going to get in like this. And it's going to be putting 3 orders in. You've got this order, you got this one, and you got this one. And that's what that looks like. And you can write a script that's not a drop script, but there's issues with trading a different code that launches a basket of orders like that. There's different issues with that. That can be a problem. You always want to verify those drops after you run that script. You need to verify. But in a single drop script, you don't, because it won't drop unless it's able to do it. So if you come over to your thing and you go to drop an order like this, you're like, yeah, we're going up. I'm trading the breakout here. I'm getting in here, and I got this biggest stop because I know news is coming out. And they might kick me out. And actually they did. I think they filled you. They ripped back, stopped you out, and it took off to the moon. So maybe you got to have like, oh, you know what? News is coming out. Oh, see, they stopped you out. So writing this trade plan up front. Now here, it doesn't mean that most breakouts break out, then they pull back, then they really go. If you're going to place 1K orders and you're going to put 27 orders in here and the ratios are like this, my God, you're cleaning up. I mean, you made money here. And a retest of this top became a bottom. And you got an order in like that. It's a lot of order placement. It's a lot better to keep placing all these scripts and picking up all these situations, up or down. Even the sell side here. You flip this around, make it the sell. You're selling the retest of this with a stop. You got stopped out. Retest up in here. You didn't. But it's basically, it's a high granularity trading it's more work, but it's like the artwork that you are seeing that's made out of dots. Bunch of dots. It looks like a picture in the end. And if you think you can approach, I guess you could. You could just say, I got a trade here. I'm going to risk. And giving the market a lot of room does not necessarily mean that you're going to make your targets. So when the market's quiet, you say, well, I got a monstrous. You're not going to stop me out of this thing. I sold here, but since your profit is down here, unless you wait for the next day, you never took profits on that. And if you sold here and it went down 20 pips or 15 pips and you're in super big, holy crap, don't you get the hell out? Take something off the table, especially if you know this here is obviously the retest. So if you got in here, the ride's over here. It's even over here. And look at this come back and haunt you back into this. So it's constantly, the market's vibrating off of previous levels. And, but yeah, that's the only way I can see to realistically approach trading from, and the nice thing about script trading is now there's no pressure. You've taken all your risks up front, and you determine risk up front, and you can see when you go change time frame how ridiculous some of these trade plans look in terms of the guy that's going to trade, say, a daily chart. But I was talking to a trader, and he said, well, I'm using the daily as my... Well, how do you use the daily? Let me do a quick time shift here. If I go to the daily chart, holy crap. Look at these. Look how... Really? Now, on the daily entries, you're talking about... This is the dollar yen. That's a lot of pips. Look at this mess. Right now, on the daily, who's not selling this thing coming into the Asian session up here? And it would look something like this. For me, it's going to be, if I'm going to sell that thing, I'm thinking about just putting like a first obvious order is the getting in on the last known highest high back here. I don't know if they're going to let me drill down. Here was the one, people were waiting on the daily world, looking from all aspects of this. Even down here, as the market's plunging, a trade plan that involves buying this last known here, and your stop is here. And here, they didn't quite get that level. They did not come down into... So you do the trade plan is going to look like something like this. Okay, well, if you want to buy there, then you just have put a lot of orders in. Even here, this was the big spike down when the stock markets came unwrapped here. But look where we've come. And when we were going through this, you could actually be that guy that trades the buy stop. Last known, I don't know. They obviously took it back and stopped you out. So this kind of trade here, sure, you want to make all those pips. You're risking about, 60 pips there to make this. You definitely made it and then some. But these things where you get the market come down into this is like a doji here. So a doji entry, right? A whole trade plan based on just capturing that. It took a long time for you to fill that order. If your first buy limit was here and you bought in with this to make this, it paid off. But it's really this. It's a lot of work to make good risk reward ratios and have a high granularity diversification entry. The work is just keep putting these drops in and you write all these scripts up front and just choose your time frame. Right now, as this thing pokes up into the insane highs, if you go to the, say, Sunday's going to open here. If you want to short the dollar, short the dollar against the yen. And of course, everybody was waiting for that resolution there. Broke out. there were so many trades before this thing broke out. Like here's your top becomes a bottom. So here in the world of pending order placement, using this fib tool as your pending order, you're looking to enter on a retest of this top as it comes back. So you're going to buy, you're going to enter here, and your stop is about 7 pips there, and you definitely made it. You definitely made your money there on this top becoming a bottom. And same thing here. This now you could have got stopped out, but this was running pretty damn tight here. You never got filled. The market never came back to that top. But in the stairway scenario, and here, you know, coming into, if you want to be a seller, yeah, it's a matter of just peppering this thing up here with all your sells up in the top. It'd be like order, you know, just keep, and just to see what that would look like, and you know, maybe you have a cluster here, and maybe you know, if you want to break out your 4 618s and put them up in here, but it really entails that kind of thing. And they also have the other order that's a little bit more risk-reward ratio. Or maybe you do have, because it does matter, if you're trying to do break-even orders, which are more assured of actually getting filled, but you don't want to get too much beyond the break-even. Here's a double bottom with the top entry here. So this was a kind of a gimme trade. Obviously, this is a big stall-out zone for this instrument right here. That was the entry, became the bottom. You could have had a 5 pip stop on that, and you made damn good. You could keep tightening that up and see just how you could have totally cleaned up. But having all these things in advance, that's the key. You have a palette. What have you fixed yourself? You're locked in. This is my risk, and that's how it is. I'm not going to trade at the market. I'm not going to get sucked into stupid stuff. Sure, you could have a trade in the market, but tight stops on that too. You can't overpress the market button. That would be, I guess, over trading or impulsive trading. This is more of a static approach, totally unemotional, and you can cure yourself of the fear of placing pendings by just looking back in the chart and going, wow, you know, if I would have done this and that, even on this breakdown here, you know, sell stops here, sell limits. If you really are biased for the trend of the day, I guess in some standpoints it doesn't matter. Like if you have just had a randomly placed buy stop, which when you do a drop, if you put it above current price, say the market's down here, and you just threw a buy stop in here just randomly, that's not a good idea. But sometimes it will, if you just happen by happen chance, say you had one here, they go rocketing through that. Yeah, never looked back and eventually made your profit. But better to say stuff like, how about if this bottom is no longer resistance? What happens? And you hear this when I first heard this years ago. People would say, well, you know, if that thing fails, then it's going the other way. At first I thought, well, now you're trying to have it both ways. But it is true that if the structures that are supposed to happen don't happen, then something is terribly wrong, and you need to have a ability to go the other way. And I think for this situation, the way these markets are is that if it does fail, it is going the other way, and painfully so, especially even on this 15 structure, that if this bottom here doesn't become where the market comes to and then continues down, then something's terribly wrong. And it's good for 15 pips of terribly wrong, because actually, and then they grab the bulls on this, pull it back for that, and you just keep going up. But yeah, you cannot necessarily just place random buy stops up here, because they're going to be traps and you're going to get killed. They're going to trap and pull you back. You're just going to, you never really want to lose money. Let's face it, you never want to lose money. I don't care if it's 5, 10, 20 pips. The idea that, oh, well, I'll make up for, yeah, you don't really want to. And from a structural point, these double bottoms do become a top, but then it goes the other way, you know. So there's a lot of chop. You've got to be willing just to make the 8, 12, 14, 15, 16. You could literally write scripts for every pip thing. And, you know, it's not so bad. I've got buy at the markets that get in at the market with a master stop, but it's terraced out. So those are not single drops though. So those are kind of risky because when you buy at the market like that, the spread's floating around. Some brokers are going to say, no. I mean, in the old days, you get a requote. I don't know if they requotes anymore because everybody wants to try to get as close to the market as they can. Servers are getting faster. People are optic fiber. You want to get high frequency optic fibers, all that stuff. People are trying to get one step ahead, but the only thing that you're up against is it's all about your mindset and waiting for a pending to fill, and they don't fill you is a problem. So maybe you have a buy stop at this fractal and a buy limit here. You have a whole cluster of orders, and you know that this, hey, you know what? And it is like that. If we don't go up, we're going down. But how to maximize that? And so that is, that's the drop method. And the time is critical. If this order lasts for too long of a time or too short of a time, you're going to miss that entry. So and then when you come into the Asian session, you're probably going to want to think in terms of the next 8 hours. So coming into Sunday night here, maybe you've got orders on the dollar yen up in here to sell. Another thing you could do is, and if you are a channel trader and you put this channel in, painfully obvious, we just broke it, but we haven't broke it if you look at this slope. But say you want to sell based on analysis, if this is the channel for you, or maybe the channel's up here, the climax of this channel, try to get some, in other words, if this was what you were, and you had analysis here, say you had, okay, this is my channel, and that's kind of the problem somewhat with analyzing the market. You can use, say this is your channel. You can define it off of these two peaks, but you want to sell. You know, you're like, this isn't going to last forever. So how do you sell up into this channel? Well, if you actually, your channel would have started here. You don't know about this yet. It hasn't happened. You've established this point, and it's all really where you start on these analysis things, right? If you start as this to here, let me just turn off this ray so it makes sense. But this is the problem, some of the problem with analysis. Of course, if you just, you cannot, it's easy to cheat. Like, this is your channel, or is this your channel? You really have to define the rate of change. But if all you know is this price and this price, then it basically comes down to this. You're going to start here, and you're going to pick that, and you're going to stick to it. So in a pending order placement out in front of the market, your sell limits would be, okay, if we retest this, you're speculating anywhere along that line that you sell. So if this order lasts for, say, 1 hour, and this order lasts for 2 hours and 3 hours, by the time you get here, the orders that the sell limits you placed here have evaporated. But if you put an 8-hour order, you want to put it up high because the whole point of cloud trading and all that projective analysis is that in order to be able to trade it, you need to put a time decay on the orders that coincides with what's logically going to happen. You don't want to be selling unless you're so convinced that, hey, it's just going to come up here and it's just going to come up here and fizzle and go down. It didn't. So you got stopped out of the orders that lasted too long. But the ones that are out further in time, say you have a like I placed sell limits on euro, and I never got filled because they were so high, but they lasted a long time. And when you can see what the market's doing, it's going to determine, like if these orders last for 15 minutes to sell here, they don't ever get filled. So the longer they last, the further they should be from current price. Same in a buy situation. Say you want to buy this triangle retest. So you put a buy limit here that lasts 8 hours. You have a buy limit here that lasts 8 hours. And given the right amount of stop, 20 pips stop to make this much, you definitely made that and then some. So markets are very, erratic, and there's a lot of where it goes down, pause, go up, pause, go down, pause, go up, pause, go up, pause, go up, pause, and all that stuff. And so your time exposure with a script is better. Even if you had buy stops here, if they evaporated but you're willing to replace them, or maybe the market has come back to even a better price. So that's a nice thing. When they all disappear, and you can sleep at night. You can put in trade plans that last for 6 hours and go to sleep at night. You don't have to babysit these markets. It's really not necessary. You know, certainly this structure level here, when it's taken out, it's brutal. It never looks back. So if you have a day job and you're like, yeah, I'm only going to risk 10 pips on that trade to make this, and you got filled on that. You come home, you got money in your account, or you go to sleep. If you figure this is nothing but a trap, and you're buying into this whole thing with your scripts, and you got a couple scalps, you've already made money on these scalps, plus you're still holding the ones with the wider stops to cash out in here, but you got to let it play out. And if need be, you just got to open another account, you know, to trade, all that stuff, to make a living trading, to make piles, more than a living, just to make security, because, you know, you don't want to be sitting there, you know, to drive around in traffic and have a day job is so utterly dangerous. You know, you can't get killed driving. Trading, all you lose is, for a lot of people, it could be their ego. There's a lot of disappointment, especially for the forecasters and the predictors and all that stuff. That can be just an emotional boat anchor. But all the script trading is very unemotional, and you're totally detached from risk, and you've chosen all your risk time windows. It's all decided up front. And I guess I'll post, I don't know if I posted this grid here I'm using, but you can change the settings in these grids. You can maybe find some of these grids out on the internet. Or you can just, you know, maybe have a different system. You could just, you know, mark the structure points here and then break out, or just look at the prices, which I can't do. So I'm just a total visual trader, but for me to survive trading, I need to have the math, which unfortunately are these scripts. And in the real world, I mean, for a visual trader, we can all see the, they're like, damn, this looks like a top. And, you know, tops do happen and bottoms do happen. You can't pick tops and bottoms, and then you can say, huh, no, I was right about that, but it's how you take advantage of that. And if you don't have the right sizing, of course, you're not going to survive the distribution phase of the top. And a lot of tops, there's not too many spike tops. There's a lot more spike tops on a smaller time frame, but when a market goes to a top, it will typically get choppy for at least a phase and back off, unless it's a news day and it's one of those flash moves to liquidity and back. But in most cases, and even if it is, if you're quick on the drop and not even trading at the market, you're putting in stops and stuff, and you have on deck the scripts ready to go, you're totally going to kill. You're going to clean up. And, of course, also, I'm just saying that if you do it. But there's a lot of things that prevent you from doing that, and people will see this video or somebody else's video and say, I couldn't trade like that. And there's a lot of things you think you can't do, but some things you must do, and it's not a choice. because the market, if the market's right, then you want to go with the market. So you really have to, and it's difficult for, I think, men to submit to anything. I mean, if you're really an alpha male or whatever they call it, where you're a type A, you're a go-getter, it's very difficult to give in or to let it be, and it's difficult. So this is a workaround. You're you're doing all that psychological punishment up front. You walk in like a samurai, willing to die, and that's really the crux of the predefined order placements. The pending orders of precision trading technique. So precision trading, that's really the way to go. It is in most fields, right? If you're going to win the race, you want your motor tune and everything's precise. I think there's just too much. I just did a search today for trading. I guess I didn't put trading psychology, but I just put the word Forex in. Very few people are talking about the psychology of it. That's definitely something that you're doing up front in a script. You're actually taking into account what's a realistic target. And you're accepting the fact that, for most situations, unless there is news coming out or the market has congested and you're expecting a huge explosion in price, it's pretty boring and there's really not a lot of pips to be had. So anyways, I hope that helps. That's my way to approach the chaos of trading from a standpoint of risk only and creating trade plans before the market opens and see how you do each day and say, you know what, I've got to, and not to say you can't trade at the market in conjunction, because some of this stuff, if you didn't place the pending and it's a good setup, but it'll also train you to think in terms of waiting to get in where the market has left a path that's obvious entry windows, and it's if you don't want to chase the market, and if you have a script ready to go and you're like, yeah, you know what, if it pulls back, well, you don't have to babysit the pullback and have your finger on the market order. You can just place a cluster of pendings down there that may be bigger. Like say you put 13 pendings in of various ratios. That's a lot. Some people would say, I'm just going to trade a 13K on one ticket at the market, and I'm just going to hope and pray. But I think it's better to trade in a precise manner where you slice the pie, diversification of order entry, diversification of risk, and if you want to step into another instrument, sure, but you want to take that pallet with you, because if you are an elephant and there's an ant, size matters. Certainly, if you don't have a trade plan for the circus, for all that, those big elephants, that scale has an issue. And, but psychologically, a loss is a loss is a loss. I mean, nobody wants to lose, and a pip is not a pip. 100 pips to people is like, wow, but so the placing all those orders, that's where the work is, and there's simply no EA that could outperform a person that can see structure. I don't think a EA can see structure, not in the sense of where the ceilings and floors are of the building, and there's the subflooring, and then there's the in this situation, you're actually writing scripts for drywall and all that stuff, insulation. So you're building a house, out of money. You can't just say, oh, I'm building 10-story houses the rest of my life. That's like saying, I'm only looking for trades where I can make 400 pips. There's not a lot of those trades out there. So writing to the market, and it's a market. It's a market just like the housing market, just like the music industry, just like, I mean, the guys that are still surviving are the guys that can change genre. So yeah, you can become a scalper. You can actually be a scalper and a swing trader all in one. All in one with, then you can place all those orders in advance and go to your day job. Or you can just go to sleep for 4 hours, place a 4-hour trade plan. But I don't know, I was excited about it, so that's why I have been blabbing for an hour. But, you know, it's all there, it's all free, and, you know, the only thing coming between you and making piles of money is, I guess, even if you're trading with MACD and all that nonsense, still this is going to make you so much more money, because I know a lot of people will queue up at one trade and just load into that puppy with $80 of risk. They're going to make $300 on that trade. And yeah, but wow, if you lose 80, how many times can you be wrong? That's the real big question, is how many times can you be wrong? Because being right and wrong about these things isn't really where it's at. You would no more open a store and stock. You can't open a store and stock such a wide range of items. Like, I think you can go into Walmart and buy just about anything, but not any high end of anything. It's all like a little bit of this, a little bit of that, or you specialize. So if you're a specialist, and they have that in the stock market, they call them specialists, there's nothing different. The transfer from anything in real life to trading is totally more duplicatable than, say, even like that. You can't take a Nautilus shell and throw it on your chart, right? Of course, real Nautilus shells have a skew to them that's not a perfect spiral anyways. But I know with the advent of computers, people want to try to idealize stuff, but the market is not idealized. And anyways, I'm just totally getting carried away in nonsense. But so anyways, I hope you see my point there. But it's about the accepting risks up front. And I think that the Samurai Creed is totally what I was attracted to psychologically, as far as martial arts and applying them to the market. And you do hear about war rooms and all that stuff, but you have to be a good loser. You have to be willing to take a beating. And that's what if you're a warrior trader, if you're a sniper, you know, snipers don't picture themselves getting shot at, and I'm sure they're wearing you know, Kevlar or whatever, and that's their stop loss, right? Stop getting hit by bullets. And, you know, but just to pigeonhole yourself may not be the best idea in the world. And yeah, maybe you're making a living. You may be making a living being a sniper. Not a lot, you know. I can imagine being a modern day sniper. It's like, hey, you know, I worked a couple months this year, but so far no calls, right? And since the robots have taken me out of my previous career, which was being a technician of 3D objects, and the robots are making 3D objects now, I'm forced to focus heavily on trading because it's my source of income. So the mechanics of trading, I guess, is the boring, static, unsexy part. And there's nothing more sexy than a Ikamushu cloud. When I first saw that, I thought, well, please tell me the story about that. And I actually had an MT4, not to ramble on, but I will, but MT4 platform on my Windows phone, and it had cloud trading on it, and it was pretty crude graphics on that. But I thought, what do we have here? Like, what fantastical thing have people come up with here? And I mean, in the end, all that stuff, it really is going to be about, okay, where's your stop? And how much room are you going to give this trade? How much are you going to lose that trade? And how often are you going to trade? And are you over trading? But the nice thing about structured order trading is that the market's telling you how much to trade, and you typically won't over trade. Especially if you set your scripts to decay in 15 minutes, you're not going to have a chance to overtrade, because there's going to be so much work dropping orders that never fill. And then you'll get, like, there is a cure for overtrading. It's, well, of course, one would be to find a hobby, but the other thing is to take that energy you would normally use to overtrade and build scripts or test them. Actually, the big cure for overtrading is open a demo account and start launching these scripts and seeing how they behave and seeing if you can trust it. And you cannot backtest this. You don't need to, because you know structure exists and you know that stops exist and you've chosen your ratios. So this whole thing about, well, you know, there's so many people that are defeatists. Well, they want to come up with an excuse not to trade. Well, can you show me evidence? Well, holy crap! People are going to church and bowing down on a prayer rug without evidence. It makes it. The thing is, it gets you through your life. So if you need a crutch like that, then by all means whip out your ikumushus or your hakanashis, whatever you need. Moving averages, 20 EMAs, and for God's sakes, right. But in the end, it's all about this risk management thing, and it's always this, it's boring as hell. When I actually started trading, I went to a thing and they had a thing on risk management. I go, oh man, really? I really kind of want to know how to get in the market and what's the best indicator. What's the best? Give me the top dog. And it's never been about that. Sadly, it's about this damn boring math. And a lot of people hate math. I know I hate math to death. And so a lot of the money I lost trading was based on chart patterns, which I love patterns. And I'm like, oh, I can see this. I can see where that's going. But without doing the math, overloaded, right? Not to say I didn't make a ton of money, but I also lost a ton of money. I mean, make tons back and forth. And even percentage-wise, it didn't matter how much money. It was about the percentages. And, of course, if you have a day job where you're making money, you can risk immense amounts of money in the market and not even phase you because you're like, yeah, that's my play money. But if you're really going to want to build an account, then you have to just enjoy the behavior of the market being static because it works to your advantage. A noisy market is a moneymaker in a properly scaled. So if your broker's giving you tight spreads, those are great. You can sit there and have a whole, like I say, a quiet market trade plan, and you have a loud market trade plan. But anyways, that's my my view of the how to approach trading from a risk to reward ratio standpoint. Because in the end, take all the romance out, take all the ikumushu clouds off, take all the linear regressions away, and you're left with the sad fact of what's your equity at the end of the hour, the end of the day, the end of the month, and that's all that ever matters. But that kind of ruins the fun of it, I suppose. So yeah, I suppose put up a cloud, right? Cloud trade it to death, or at least have it because it looks cool.